Well, happy Sunday, folks. Hey, it's Shooter. Welcome to Swing Trade Notes. Of course, at the end of our presentation, please do review our disclosure. Talk about a risky week. Spent a lot of time thinking about that, about how we could sort of mitigate our risk. Well, ultimately, that ended in an Israel-Iran tensions article and hedging Israel and the Iran conflict. That raises an additional catalyst this week. We have earnings, FOMC, sort of a dollar route, in the midst of a drawdown in the indices. And do we need anything else? Well, apparently we've got it. So I'm going to suggest that you review it. If you like it, please, obviously like and share. Now let's jump into swing trade notes. Now, performance last week, I'm going to say was acceptable. I actually was very disappointed. I developed this thesis for every entry or every trade I take, and sometimes they work. And I'm sitting there thinking with Hood and Coin this past week that, hey, with a $65,000 bid for the entire quarter, how the heck could it miss? Well, apparently we need some new CEO because they missed. Well, those of you who've been following me obviously know I manage my book. Basically, I cap my losses period to 20% of my gains or I'm risk off. All right. I manage it on a day-to-day basis, on a weekly basis, monthly basis, quarter basis, annually. So both on the daily and weekly, Hood triggered us. Well, on top of that, also we had a Q that did, but ultimately it triggered more because my position size, because I was trying to stay balanced around Meta, so I had a lot on the table. So it was a bigger hit than I would have normally taken if I hadn't put Meta on. But Meta worked. But again, here we go. I've managed my position size because I want to have equal exposure to the upside when a trade works versus when it failed. So if I have 5 trades on, I want to have the equal amount of capital in each of them. And ultimately, that's the reason Hood and Coin triggered a risk-off scenario. But ended up just about $16, one of our better weeks for the year. We do still have TLT as well as AST Space Global. Now, we did add another piece last week. And I'm probably going to add one before I think there's an event the 8th. I think earnings is the 10th. So I'm probably going to get up to a full position size this week, just giving you a heads up on that. There's a lot I like in earnings. I mean, I like Palantir, might still chase that, right? I like, obviously, SMCI, Exact Sciences, ARM, Qualcomm, even AppLovin started pulling back. I couldn't get the count. No hammer candle to the downside. So also like DraftKings and Block on Thursday. Unity's there as well. So we could have a good reporting week for firms there as well, Trade Desk. So we'll see how I sort of jump in this week. So we really have 2 continuations or breakouts, which is NVDA and SMCI, and then one 50% back, which also happens to be a golden box setup as well. Let's start with SMCI. Now, this is a lot of short and sweet, a way to change it any differently. Either this trade works or it doesn't. In other words, I think SMCI beats. We know what kind of manufacturing they have. We know what they've done. We know who they've worked with. We know what they've built. They've supported American corp. Is this an Enron? No, I don't think so. I think it's just oversold. So I'm trying to capitalize on a $26 price where I think a realistic upside is $50 with a good beat. So we have significant upside. So I decided to do what's referred to as a disjointed straddle. And part of this is I want to capture the upside, but at the same time, I want to be close to BE in all scenarios. So if I get my $32, then, I'm going to make a little money. I won't get rich, but hey, it'll work. So I want to break it down between November 8th, 30, 40, and $50 calls. So I'm trying to capitalize big time on the upside if we get back to that $50. We'll have about 1,000% gain on those $50 calls, should that $50 price manifest into earning. Then we turn around and buy the other side. So we're buying puts, November 22nd, $8 puts. Now I'm going way down there. Again, my objective is just BE. Now, the way that I'm structuring this, I always size everything based on the dollar figure just because it works for my simple mind. So I'm going to put 3x the size in calls versus 1x the size in the puts. Again, the scenario is BE, okay, or I'm going to walk away with a 50% loss. That's the objective. Earnings is November 6th. So this is the 5 minute after the opening trade. You wait till premium settles down just a minute, and that's when you pick your poison and go. All right, NVDA. Actually, really, I almost just did a swing trade notes with NVDA this week, but I really liked SMCI, and then I found one other one I really liked. So that's where we are. NVDA earnings is November 20th, so we got plenty of time here. That said, there's one quagmire with this setup. My count says we're in a minor wave 2, and it hasn't completed. We might complete around 126, which is why we have the tight stop at 132. Breaks below this candle. Looks to me like maybe a hammer candle to me. So now that said, the mountain structure here on NVDA is beautiful. Nice symmetry in the legs, right? Little confusion on whether it wants to get back up to this. Structured, chopped it out, broke above, right? Broke above, rejected, came back, tested the floor of the range, right? So I think we break out, head towards this 150 fib around 161. Now, I don't know that this trade is going to keep us in there. Right now, the objective is just a swing target of 148, which basically we're just looking for this high over here because I think we just see some continuation. Now, the prudent investor sells some December 125 cash puts. Could go out to January, even March. All right. It's up to you on how much premium you want to earn. Me, I like to stay in a 60, 90-day box because honestly, it's just too much work tracking 6 months of premium. I'm not a major premium seller, so it just adds more time to my work and I have to watch something else for a longer period of time and I get bored doing that, so I don't like to do it. That's it. That's the reason. Nothing against it, but that's just something, maybe I get a little older, I start doing that when I want to spend more time fishing or whatever. Then the alternative is the December 150 calls. And again, earnings is November 20th. Now I went with the 150 calls because I wanted to capture the upside. So if we end up 50% in the middle at this 100% fib at 141, we still should be able to, book a 15 or 20% gain and we're good. Again, I'm always looking for a 30 to 50% gain on my setup. 75% of the time I enter it. So, but again, I like NVDA here. We have quite a little bit of time, and the structure of the wave is the reason that we entered this here. Now, this really is a 50% DQ. Our day Q, new energy, don't even know what they do, didn't look at it. January 25 calls was the only thing I could find. I'd have rather found like a $27 or a $30 call that was reasonable, but the premium, there's a 30% spread, and I'm not paying that. But, sometimes the FOMO gets me, and at the end of the day, I buy the premium, like everybody else does when they like something. No earnings data is reported. Now here, this wave structure is just a beautiful thing. Look at this push. Rejection, equality, and another push, rejection, and now we're building back up the flag to the upside. So we should bust out here. Conservatively, we're going to see $40 on the stock. So it almost has 100% upside once it gets above the 78.6. But right now, our swing target, we're using the 50% back on the golden box because I like the structure. That's it. That's really only my only take. So that's what we have for this week, folks. Great trading. Until next time.